But we know that we probably need to get to March before we can get an undistorted picture of things, particularly as we had Chinese New Year falling in the first couple of months this year, and that's going to play havoc with some of those export and import numbers with regard to Japan and China. But what's weighing the most? Is it the uncertainty over global trade? Is it uncertainty over US-Japan trade talks and the auto sector? Or is it just a sense that we are seeing a regional and global slowdown in demand?
Look, I think it's very clear that you've got a slowdown in demand, particularly for capital goods, and that's compounded by the weakness we've got in U.S. car sales. And for Japan, that's very important. Again, exports in February down by more than a percentage point. You know, that's not good news, and it's going to put some warning signs on some of the profit forecasts, particularly for the Japanese car companies.
Right. So in terms of what could potentially also further complicate matters, we're still looking at, of course, later in the year, we'll be getting that sales tax hike as well. Do you expect that to be as disastrous for the Japanese economy as the last time we had a sales tax rise?
No, absolutely not. And it's actually very interesting. You know, you've got a global economy that is weakening, but the Japanese domestic economy is actually accelerating very, very smartly. And you see that in, you know, the very strong retail data. You see that in housing starts actually coming through. Even if you look at the, you know, finance data, if you look at credit card, you know, and consumer finance data, you do see that Mr. and Mrs. Watanabe are opening their purse strings and are actually spending. So it's a global slowdown and domestic strengths here in Japan.
What about the 2019 Shunto wage negotiations? Where are we expecting them to go, given that the labor market has looked pretty strong?
No, very important point here, and that's, you know, the next key focus here. You should expect wage gains, which last year came to around 2%. They're probably going to be around 2.3, 2.4%. Not a very big lift up here, but it's interesting. You find that, you know, the wage gains are actually very skewed by age group. So the younger generation, university graduates, are actually seeing their base salaries rise by as much as 6%. So the tightness in the labor market is at the front end, at the young generation. That's where the wage gains are coming through, while the old Mick Jagger generation is still seeing wages decline.
And yet, given everything that's happening with the global economy, there seems to be a market expectation that the Bank of Japan could, in fact, employ some additional monetary policy accommodation. This GTV chart on the Bloomberg just showing the sizes of central banks' balance sheet, whether it's the Fed, the ECB, or the BOJ. Will the BOJ be forced to blink just because other central banks are turning more and more dovish? And what's the concern about central banks really having little ammunition left?
No, I actually don't think that the BOJ is going to be doing anything new. And remember, I mean, this is the most accommodative bank, central bank. When you look at the price of money, the fact that you've got negative rates at the front end and capping the 10-year bond yield. So from that perspective, monetary policy, you know, is really very, very accommodative here. The focus in Japan is going to be fiscal policy. And, you know, we already had an additional supplementary budget from Prime Minister Abe. I think if, you know, we were to see further weakness in the global economy, I do think that, you know, additional fiscal measures, you know, are likely to be coming here in Japan. And if things get really bad, you know, I think it is even possible that the sales tax increase is going to be postponed. But that's only, you know, if we really were to slip into a global recession.
Yes, but how much do we rely on potentially the weakness in the yen to be able to benefit, in particular when it comes to the import bill, in the sense that we are also seeing that rise in energy prices?
Very, very interesting. You know, you put your finger on the pulse here. The terms of trade in Japan, so the combination of import prices and the exchange rate is very, very important. Now, the good news is that domestic competition is intensifying. So actually, I, as a consumer in Japan, I'm actually benefiting from producers offering lower prices. And also, the Japanese government is doing a fantastic job at boosting the purchasing power of the people by cutting telecommunications prices, by ordering cuts in pharmaceutical prices. So all the regulated prices this year are actually going down by between 2 and 3%. So I do have a very nice boost in the purchasing power of the people.
Last week, we were speaking to former BOJ policy member Sayuri Shirai, and she was quite concerned about the exchange rate being included in these future negotiations on trade between the U.S. and Japan. Is that a big risk?
Look, the Trump administration is very clear. They are weaponizing the dollar in the sense that any trade negotiation, you know, the currency is now openly out there. In the past, it was always in the background, a potential sort of threat that us analysts like to talk about. But now it's out in the open. That's one of the merits of the Trump administration that you actually have. It's very WYSIWYG. What you see is what you get there. For Japan, it's interesting. I believe that, you know, there are actually lots of goods and, you know, little presents that the Japanese can offer President Trump, you know, like, for example, an infrastructure investment fund.
Sure.
You know, so from that perspective, I think the risk of tariffs is pretty low for Japan.